Shall we have a clear conversation about Strive Capital's $10 million no credit check business loan? I think we should, right? So if you are around, you have a few minutes, I want you to stick around till the end of today's conversation. You're going to love it. Welcome back, folks, to another edition of the Awesome Sort of Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak to you about Strive Capital's $10 million no credit check business loan. And what we love is that I first want to give you a loan overview here. So with Strive Capital, getting funding to grow your business becomes easy, because Strive Capital provides access to fast, flexible financing so you can manage cash flows and invest in growth. The only caveat is that, folks, you need to be a Strive Capital customer. In other words, you need to use Stripe for your payment processing, right? Because they're kind of similar to PayPal, and they want you to be their member, a customer rather, before giving you the capability you need to grow your business. There is not a lengthy application here. Eligibility is determined solely based on your history with Stripe. So there's no credit check and no complicated application process. That's what we love. If you have a history, a relationship with Stripe, then this business loan is great for you. You can get your money quickly because funds typically arrive in the next business day directly into your Stripe account. You have one flat fee. We love that. We love the fee transparency that Stripe has put forward. So you pay one flat fee that never changes. There are no compounding interest charges, collateral applications, or late fees. And you pay when you get paid. Think about that. This is just fantastic. So repayment is fully automated and adjusts to your daily sales. So Stripe will deduct a fixed percentage of your sales until the total owed is repaid. So how does the whole thing work, folks? So first you need to check your eligibility. So you need to log into your dashboard to see if you're eligible for an offer based on factors that include your payment volume and history on Stripe. So you got to be a Stripe customer. So number two, you want to select your offer. So you want to select an offer that is right for your business needs, and the loan fee and repayment rate are set based on the loan amount. Three, you will receive your funds, right? So after Stripe reviews your selection, the funds will be deposited into your Stripe account, typically the next business day. And four, you want to pay down as you earn. So what will happen here is that you will automatically repay the loan with a fixed percentage of your daily sales until the total amount is repaid. Okay. And what really sets Stripe apart is that Stripe, when you really think about it, is not just a lender. It's a payment processing platform with tools designed for small businesses. So while its lending policy is rather strict, it offers a constellation of options, at least in our view, to help you make the most of its services. So if you don't use Stripe, then you want to go for Capital One or another player. Okay, this is very important. And one thing I also want to say here is that the Stripe Capital loans are not issued by Stripe because Stripe is not a lender. So while Stripe Capital services your loan, it is technically issued by Celtic Bank, member FDIC. Let me talk about loan eligibility. And I really want to dig a little deeper here because people need to understand. First of all, you want to prefer EIN funding. In other words, you want to actually apply as a business, as a legit business. You want to have an EIN for your LLC, your S Corp, C Corp, or your partnership. And remember, if you are a single member, if you are a one-person business, you can still have a single member LLC. Okay? And Stripe wants you to be at least in business for 3 months. So business age, at least 3 months. Let me ask you a question. Big decision time. I want you to talk to me right now. Are you a startup? Are you like a brand new startup? Or have you been around for a while? Are you a very young business? Think about that. So Stripe will not qualify you if you are a brand new business. If you're just brand new, fresh out of the oven, you will not qualify. And eligibility, you need to be based in the US. Stripe Capital only supports businesses located or incorporated in the United States. You must have processed payments on Stripe for 1 year or more. So even if you have been in business for 3 months, at least you need to process payments on Stripe for 1 year or more. You need to have a processing volume of $10,000 minimum per year. And you need to be in good standing with Stripe Capital. So if your business previously applied for a capital loan and was rejected, you will be ineligible to receive a new loan after a new loan offer for 30 days. So 30 days is when you have to wait, okay? Very important. And so there are some important factors Stripe wants you to consider before applying. They love 4 things. They love a growing business. So the size of your loan offer is shaped by how much you process through Stripe. So businesses with positive growth trajectories are more likely to be eligible for an offer. They want you to have a steady processing record. So you want to have a consistent, steady processing record with limited periods of low or zero volume that shows stability in your business and increases your likelihood of qualifying for an offer. You also want to have a large customer base. So businesses with more customers are more likely to be eligible for an offer. And the 4th element here is you want to have a low dispute rate. So businesses with low rates of unresolved chargebacks are more likely to qualify for funding. Okay. And so there are some additional steps you need to take. You want to connect your business bank account to the Stripe platform. This is very important. That way, Stripe can view your bank balances and transactions to better determine your eligibility for an offer. And you also need to bring more processing volume onto Stripe. So at the end of the day, Stripe just wants you to just bring a lot of ka-ching, ka-ching, ka-ching to them. If you want to get a loan from them and you want that loan to be no credit check business loan, you need to bring a lot of moolah to the Stripe platform. Let me talk to you about the pros and cons of Stripe Capital. What are the pros and cons that you need to be aware of? The pros: you have 60-day payment cycles, daily repayments based on Stripe sales, no interest, just a flat fee. Okay, Stripe Capital may be your most convenient and accessible funding source if you use Stripe to process payments. I've said this before, because at the end of the day, this is a no credit check business loan, so your credit score has zero impact on your ability to borrow the amount you borrow. Since there is no application process, you don't have to go through the trouble of gathering paperwork or even filling out information about your business. Also, Stripe Capital does not charge prepayment penalties, and the fixed fee is not charged upfront. So this means that you can save actually on interest payments by paying early. Some other business lenders that we have reviewed on this show don't charge prepayment penalties, but they might front load your interest. So paying early will not save you money in this case. So those were the pros. What about the cons? Before I talk about the cons, let me ask you a big question. Have you been using big decision time, folks? Have you been using Stripe before for payment processing, or have you been using PayPal or another player? Yes or no? Okay, if you have been using Stripe for so many years or so many months, have you seen some drawbacks to the system? Because based on our analysis, there are 3. First of all, Stripe is not transparent about fees and costs. For us, loan transparency is very important. Fee transparency is very important, and Stripe needs to do a better job at that. And early repayment may mean higher effective APR. And you must use Stripe to process payments. As you can see, Stripe wants you to bring everything into their ecosystem. Listen, I'm not blaming them. They built a platform. They need to grow the platform. And if you're not playing with them, they're not giving you the cash you need. So they want you have to be in it to win it, right? That's what my old folks used to say. So the bottom line here is that a big drawback for this Stripe no credit check business loan is you need to use Stripe to process payments. And so rather than meeting general standards for revenue, eligibility depends on individual performance. So for this reason, a small business could theoretically become eligible for funding only because their revenue has grown substantially, even if they haven't reached a specific threshold. But this sort of this lending model comes with caveats. So just wanted you to think about that. Let me give you a few details about this Stripe Capital $10 million no credit check business loan. Actually, the $10 million is the maximum loan amount. Okay, so here are some details that you need to know. Eligibility is determined based on a combination of factors. So Stripe will look at your overall processing volume and history on the platform. And eligible U.S. businesses with at least 3 months of processing history will receive an email and dashboard notification if they have an offer available. So you will see it on your dashboard. In some cases, it can be 3 months. Some cases, it can be 6 months or 9 months or 12 months. It depends on your business. It depends on the location. So it depends on the geography and the macro of the industry. So what is the macroeconomic condition in your industry? And Stripe Capital bases all offers only on the transaction history and processing volume of your Stripe account. So applying for a loan does not require a credit check. And the thing here is that, can you really request a different offer amount? Right? Big decision time. I want you to talk to me. Let's say you basically have a Stripe Capital account. They sent you an offer, the loan, you don't like the amount. Can you request a different offer amount? Yes, you can. Because when you log into the Capital tab of your dashboard, you can use a slider to choose a custom amount up to the maximum offer amount, and the loan fee and repayment rate adjust based on the amount you choose. Okay, and so after you accept an offer, you can receive your funds within 3 days. Okay, because once you accept an offer, they will review your application, and if you are approved, you will see the funds in your Stripe account, and like I said, typically within 1 or 2 business days. And so if for any reason your offer expires, you can actually have to wait, because your offer is available for 30 days. After that point, your business is automatically reevaluated to see if you are eligible for an additional offer. If you are seeking financing at a later time, you want to check the Capital tab of your dashboard to see if you have another offer. And the Stripe will also send you an email if you have an offer. Okay, it's important to know. And one thing I also want to say here is that your account will be evaluated for additional funds when you have repaid at least 70% of another loan that you have contracted with Stripe. Okay, this is important. And at the end of the day, it's all about how you manage your Stripe account and how you stay on top of your payments. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are actually having a conversation today about Stripe Capital's $10 million no credit check business loan. And let's talk now about repayments. So the total cost of the loan is kind of straightforward. So the total amount you owe is your loan amount plus a flat fee. You will not pay any interest or any other fees. For example, late fees, early payment fees, or origination fees. Okay. And in terms of repayment, how does the whole thing work with Stripe Capital? They do it very nicely. So they will collect repayment automatically through a percentage of your Stripe sales, known as the repayment rate. This means that you pay down more when business is busy and booming, and less if things slow down. So your mileage may vary in terms of how much you're paying versus your rivals or versus the business next door. Okay, and how does Stripe calculate the fee? Because this is something that a lot of people are interested in knowing. And so Stripe will evaluate your business daily for eligibility, which includes your flat fee pricing based on your processing value and history on Stripe. So while many traditional loans have hidden fees or compounding interest, what we love here is that Stripe Capital loans have a single flat fee that you pay back over the length of the loan. So you don't pay interest over time, and they don't charge early payment fees or late fees. So this is pretty good. And let me ask you a question. Big decision time, folks. Big decision time. When do you need to repay the amount you owe? Let's say right now you owe Stripe $45,000, right? They have advanced you the money. When do you need to repay? You will automatically repay both the loan and the fee through a percentage of your sales And this is what Strap calls your repayment rate until you repay the total amount you owe. The loan fee is not charged upfront. So bottom line here is that Strap is trying to cover their ass. They are mitigating risk by taking their money every single day, a certain percentage. That way they don't have to wait for you to pay after 30 days. If something happens, guess what? At least they have collected as much as they can through this pattern, this scheme of daily collection. And another thing that you need to be thinking about is that even if you pay down your loan early, no problem. You can make additional payments or pay the total amount you owe in full at any point by clicking the Make Payment button in the Capital tab of your dashboard. And if your revenue slows down, God forbid, if your revenue slows down, remember that the repayment rate is a fixed percentage of your sales volume. So as long as you meet the minimum, the amount you pay will adjust to your sales. Let's talk about minimums, because I was talking to you about minimums and people want to know more. And as we were doing research for this show, we saw in forums, we saw on our own wall that people wanted to know more about the minimums. So what is a minimum really? So when we speak about the Strap Capital's $10 million no credit check business loan, a minimum is the amount that you are required to repay every payment period. So Strap automatically deducts a percentage of your sales. The repayment rate, which counts towards your minimum, also is important. It has to be taken into account. So let's say if the total amount that you repay through sales, right, doesn't meet the minimum, you must pay the remaining amount at the end of the period. And you can view your minimum in the Capital tab of your dashboard or in your loan agreements. Okay, and Strap does have minimums because they want to ensure that you repay your loan within 18 months in line with your loan term. That's all it is. They're just trying to cover their ass. It's all about risk mitigation, folks. Okay, and so you don't have to make any payments. Strap itself will automatically deduct a percentage of funds, the repayment rate from your sale. Right, your sales, your monthly sales, your daily sales, your weekly sales, and this will count towards your minimum. If you have not met the minimum by the end of each payment period, Strap will automatically debits the balance needed to meet your minimum loan, your minimum repayment amount from your bank account. Okay, so things happen automatically, and the minimum payment process is automatic and requires no actions on your part. You can also make manual payments towards your minimum through your dashboard following the Make Payment option. And let me ask you a question. Big decision time, folks. What happens if you don't meet your minimum for the payment period? And the thing here is that Strap has put everything in place. So let's say if you have satisfied the minimum for the current period, they will continue to withhold payments from your daily sales. Okay, and how do you actually apply repayments to your loan balance and your minimum? Strap will first apply your loan repayments to repay the past due balance, if any, and then to pay down your balance in the current payment period. They do not apply repayments above your minimum to your future payment periods. They don't do that. So it's something you need to be aware of here. Let's talk about rates, fees, and terms. This is important, folks. So again, we are still having a conversation about the Strap Capital's $10 million no credit check business loan. So Strap does not disclose the cost of its loans. That makes sense, but it does state that you will only be charged a flat fee. The examples it provides on its website is for a fee of 10% of the loan amount. Some previous borrowers on forums like Reddit report that it varied for them actually based on how much they chose to borrow and the volume of sales they had previously processed through Strap. And you also need to take into account the macro and the geography of the business. It's very important, okay? And because repayments are a daily percentage of sales, the effective APR can also vary. This will not affect the overall cost of your loan, however, right? But if you repay your loan more quickly, let's say more quickly because of an increase in sales, your loan term will be shorter than the maximum 18 months. And this, in effect, will increase your APR, but the flat fee and the total cost of your loan will remain the same, right? Because the APR is calculated on an annual basis, annual percentage rate. Let me give you an example. Let me give you two examples, really. So here are two example scenarios to help you understand how Stripe Capital's rates and the minimum payment process work. So example number one, let's say you successfully meet your minimum through daily sales deductions. So your minimum amount is $3,000 for the for the 60-day period ending on June 1st. Hypothetically, right? In that period, you repaid $3,500 of your loan balance through Stripe, deducting a fixed percentage of your sales volume. This is the repayment rate. You have successfully met your minimum. Stripe will continue to withhold repayments during this payment period to pay down your total loan balance. In the next 60-day period, you still must meet the minimum of $3,000. So that's the first example, first scenario. Example number two, let's say you don't meet your minimum through daily sales deductions. So your minimum is $3,000 for the 60-day period ending on June 1st, right? In that period, you repaid, say, $2,500 of your loan balance through Stripe, actually deducting a fixed percentage of your sales volume, the repayment rate. On June 1st, you will be required to pay the remaining balance of your minimum, which is in this case $500, right? Because if you deduct $2,500 from $3,000, that's $500. On June 1st, Stripe will automatically debit $500 from your account, from your bank account, to meet your minimum. So you always have to meet your minimum. All right, folks, this is it for today's conversation. I was talking to you about the Stripe Capital's $10 million no credit check business loan, and I gave you a loan overview, spoken to you about eligibility, pros and cons, the details of the loan, the repayment process, the minimums, the rate, fees, and terms. Thank you so much for your attention. I really appreciate it. I'll see you next time. But until then, remember, stay marvelous.